All right, and good morning, good afternoon, good evening to you, traders, depending, of course, on where you're joining us from in the world. And welcome to the Trading Battle number 45. I'm your host, Christopher Guzman. I'm the founder, CEO, and head trader here at Kickstart Trading. We teach people how to trade and provide funding for disciplined traders. It's going to be a great battle today. I'm really excited about this one. In the first corner, we have Phillip Konchar. Philip, how are you?
Hi all, and welcome to another session of madness and excitement. In about 29 minutes, we'll have everything kick off with non-farm payroll. So whatever we do here, it must be wrong. It will be wrong in some way. But anyway, we'll have fun. We'll have fun.
Absolutely. Philip, by the way, is the founder and CEO of TraderCast, and of course, a prior contestant on the Trading Battle as well. So, welcome back, Philip. In
Thank
the
you.
other corner, it's an old friend and colleague of mine, Gary Fichardt. Such a pleasure, Gary.
Hey Chris, how you doing, buddy? Good to see you again.
Good to see you, man. Long time no see. Gary
Yes,
is a Forex trader, mentor, and educator at FX Big Dog. Uh, Gary, I hope you're ready for a great battle, my friend.
absolutely. Just like Philip said, we got the non-farm payroll coming up, but it's going to be important to see what the numbers come out, especially the hourly earnings. See what that does. But I'm looking forward to it because there's a lot of opportunity, man. There is a lot. So those traders watching right now, just make sure you stay tuned, take some notes, take some pens, because Chris, it is going to be fantastic. Great information going to be shared today.
Absolutely. Right, guys, let's not waste any time. Let's jump right into challenge number one. How about that?
What? Already? Not even a coffee break, no lunch, not that. It's just straight into it.
Holding hands first.
We'll see. We'll see. You have to be good boys. If you're good boys, I'll give you a coffee break.
All right. All right. Sounds good.
All right, guys. Challenge number one is you need to trade what's on your watch list right now. So, in other words, put it another way, what's your hottest trade? What's the hottest opportunity you're looking at? What are you waiting on? What's the setup? Go ahead, give it to me. We'll start with Philip.
Well, as I said, for those of you who've traded before, you know that anything open ahead of non-farm payroll is going to carry a certain amount of risk with it, because obviously, if numbers come up better than expected, that doesn't necessarily mean that markets should rally. Sometimes you have market sell-off on a good number because that means something else, and vice versa. So there's a couple of actually several different things that I'm looking at from the indices point of view. But from the contrarian point of view, I'm going to go long oil. And I think there's a good reason. I don't know if you can see my screen or not.
Yeah.
Recently, we've heard some news that Biden announced that he's releasing stockpiles from strategic reserves, and UK will join him as well in that. In attempt to lower the price of crude oil, which spiked higher because of the geopolitical tension in Ukraine and so on. Now, I think oil is coming to a very good level. Us traders, we are dumb guys, dumb bunch. We like round numbers. And oil is currently trading very close to $100 per barrel, just below that level. So it's a highly speculative entry ahead of non-farm payroll, because that can impact how oil reacts as well, because oil is sold in US dollars, and dollar could rally and have a kind of a volatility kick in as a result of non-farm payroll. So I would like to go long oil at market with a stop loss. Well, my price is currently at 99.80. That's my market price. Because I'm seeing this as a coiling price action. There's an energy buildup, lower highs, higher lows. And if I saw this in a shorter term time frame, I would definitely jump on this trade with the expectation to see either a loss of support, retest, and continuation of the selling pressure, or a rally from here, breakout above the resistance. And then I would take this much points, the distance of this wider consolidation here, and then I would extend that to the upside. And because I'm bullish oil, because I say I don't think that whatever they do might not lower the price of oil short term, I'm going to go long oil at market 99.80. My stop is going to be quite wild. So I'm going to have the stop at 95. So there's a $5 in price, or 500 points in price of risk. And I will be looking to take profits at 109, followed by 112. So 2 take profit levels on the upside. So something like this for me. Okay.
Okay, fantastic. So going long on
$5
oil.
risk for up to $12 of potential gain on this trade. Highly speculative, contrarian, but that's where I am.
Okay, thank you very much. And that's your hottest trade, yes? That's
Yes.
okay.
There's another one in Europe, but I'll keep that one for later.
You sure? 'Cause now's your time, man. Now's your time. Get them out there.
Yes. Well, I thought we got only one.
No, you can put as many trades as you want.
No, I'll just stick with this one for now.
Okay.
Thank
Gary,
you.
don't get any funny ideas there.
I've got 28 currency pairs I'm going to go in right now.
All right, I love it. Let's do it.
I'm just kidding. All right. Well, Chris, you know what? Let me tell you something. This is a battle, so let's battle this one out. I'm going to go actually against. I'm going to trade against oil, which means I'm going to go ahead and buy US dollar CAD, and I'm going to go ahead and take a shot at my chart right here. So this is what I'm looking at right now. US CAD is currently right now also setting up as it's got a flat top, but we've got a ascending triangle, which means we're going to see a proper breakout to the upside. But I'm looking at this and I'm saying that, and you know, Chris, we've been around. You've not been trading for a long time together. You can see right here we've got a wave 1, 2, 3 down here, and we did have a fourth wave test, but I believe that the market may be sideways now with the non-farm payroll coming out down the next few 20 minutes or so. I'm going to suspect that there might be a bit of choppiness, but I'm expecting CAD US dollar CAD to be more range bound for the time being. I think the news coming out right here is not going to set it off in a direction, but I'm gonna have a backup plan. My backup plan, instead of going in with just one entry point, I'm going to go ahead and do multiple entry points. So what I'm going to do here is I'm going to go ahead and take US dollar CAD. I'm going to buy here, but I'm going to buy in increments, and I'm going to go ahead and buy lower. I'm going to go ahead and show you exactly what I'm going to do. I'm going to go into my platform right here, ACAP platform. I'm going to go to, let's go to US dollar CAD right here. I'm going to go pull it up, USD CAD. And I'm going to open, let me just open up here. And I'm not going to go with 100 lots because I'm not going to be that greedy. I've got a $10,000 trading count, so I've got to be a little less aggressive on that. But I'm going to go with, let's go with 2 standard lots. Yep, and I'm going to go at market, but I'm also enter limit buy orders. So I'm going to go at market right here. I'm going to go ahead and enter at market. There it is there. So our entry price on this is at $24.90. Let's see here. Did I get it? No, hang on. Wait a minute. There we go. Boom, we're in. Now, what I'm going to do is I'm going to go ahead and enter just below the market here. And I'm going to go ahead and enter again about 20 pips down. So as we drop 20 pips, I want to go ahead and rebuy back in again. I'm going to do this multiple times. What time frame am I on here? Let's change the time frame to... let's do, this is actually fine. Just 20 pips would be perfect on this. So let's do again, trade here. So I'm going to go ahead and enter again here. And at that price there, I'm going to go ahead and put in another buy limit order. And let's see what the buy limit order right here. How many lot sizes I put in for? All right, perfect there. So buy limit order. And let's go do that again. I want to make double sure. Don't want to get in. There it is there. So buy limit order is there. I'm going to enter another trade there. And let's make sure the lot sizes is correct. Yes, it is. And then I'm going to do another buy limit order down here, just below that. And what I'm doing is, Chris, you can see I'm actually stacking it here by the support level. So I'm expecting the market to bounce, and I'll be watching this closely because I want to make sure that when I get into some bit of profit, I'm being aggressive. I'm going in with larger lot sizes. So the market does go ahead and move a little further down south. We'll enter, but then as soon as it goes back up again, we'll go ahead and look to take profits. I'm entering at 4 entries at the moment right now, at that level. Now, you said we can go in with multiple entry points, multiple trades. I want to do another one, New Zealand CAD as well. And this time around again, I'm going to be short term. I'm looking at more short term move, and I'm going to buy New Zealand CAD. So I'm going to go to New Zealand CAD right here, open it up. New Zealand CAD. Now I'm really getting heavy against my opponent here.
Yeah, I was just gonna say you're really going putting all those eggs in the basket, huh?
Yes, I am. Hang on, didn't pop up here. New Zealand.
I think you're running out of room. Does anybody have any more baskets that Gary can put his eggs into?
Hey, you give me an opportunity, I'm in there. I'm in there, and multiple times. All right, here we go. So I'm going to go ahead and buy at market right here. So I'm going to go into market, and then I'm going to do the same thing here. I'm going to be entering in multiple positions here. So let's go ahead and I'm going to add another 3 on this one. So down here, I put in another 3 down here. I'm going to go in. Oh, hang on. What am I doing there? No, that's not what I want to do.
So you're basically anticipating weakness on oil, yeah?
Yes, correct.
So,
yes, absolutely.
So if Philip is right, then he'll look like a superstar, and you would have failed in spectacular fashion. Is that right?
Absolutely. I'll have a very bad day, and I'll probably not be on the show ever again. That's what's going to happen. But you know what? We'll have to wait and see. Now, I want to make sure about here. Let's see my entry points here. Did I get in the right entries here? I got into 2470 there, and I got 2440. Yep, that looks perfect. Yep, 25. Yep, we're good. So I've gone ahead and entered one here. I'm going to go into one more time here on this, and then we should be good to go. So let me drop this down here. And is that let's see here. Yeah, so I should be good on this right here. All right, perfect. There we go. Done.
Where are you putting your stops, Gary, and where are you looking to take profit?
Well, because it's short term, I'm gonna be watching it. I should be seeing. I'm gonna probably be taking profit within the session already. So if things work out the way I planned it to work out, based on the news coming out in the next 15 minutes, then this should be a trade that I should be closing out pretty soon within this hour. So if not, I'll make a decision, but I'm not going to be targeting for too much. I'm looking for 20 plus pips on this trade, depending, of course, with the type of movement we get in the non-farm payroll.
Is that 20 pips from your original entry? And then obviously everything additional is a bonus, yeah?
Correct, yeah. Well, I'm talking about net 20 pips. So I'm looking for a net 20 plus pips. So anything, if I pick up multiple entry points, what I'll be looking at is at least a minimum of 20 pips. But if the market goes ahead and offers it more because of the news and it pushes, then we might go ahead and grab a little bit more out of that. But anywhere above 20 pips, I'll be looking to cash out.
So if I understand correctly, then no stop, no limit. You're big dogging it.
Absolutely. Now, keep in mind, normally what I would do is I'd use a trading software, an EA, that's actually got all my parameters set in, and then I use those parameters to actually enter the market and trade the setup. So because I don't have that, I'm just going to go ahead and place it with this manually right now and manage that position on my own.
Okay, fantastic. Well, Gary showing everybody a lesson in trader psychology and emotional fortitude, huh?
Absolutely.
I love it. All right. Well, one of you is going to be right, and one of you is going to be wrong on this call. So,
well, that's what it's going to be, right? It's a battle, right? Someone's going to be right and wrong. If I just do what Philip does, we're never going to find a winner, right?
This is true. I'm very interested to see how this plays out. Very interested. All right, guys, let's move on to challenge number 2. Now, challenge number 2 is really exciting. Basically, what you guys have to do is you have to trade 37 lots. No, I'm joking.
Good.
April Fool. I know Gary loves that.
Yes, let's do it.
He's like, can I do it across 37 entries though? No, April Fools, guys. For April Fools, we have something really special today, and I'm really excited. We are going to spin the wheel. Okay, we have this special magical wheel, and we're going to spin it. And whatever the wheel says you have to trade, you have to trade. So here we go. Wheel is spinning. Let's see what happens. Anything? Are you rooting for anything, guys? Anything you want?
Doesn't matter.
Too late now. Looks like
Dollar yen.
dollar yen, everybody. US dollar JPY. So, Gary, let's start with you. Trade the dollar yen, please, in whatever fashion you see fit.
If you say so, okay. If you say so. All right. So, so let me go ahead and take a look. Right, US dollar yen. I'm going to just go to the chart quickly here and take a look at the chart. I already think I know what I want to do on this. Now I'm going to go to the weekly chart right here. Wow. What? The weekly chart is showing us a big shooting star to the upside. Hey, listen here. This is what's going to go down. I'm going to go ahead and sell US. Now you're probably thinking, but Big Dog, hold on a second. You've just gone ahead and bought US dollar CAD. Now you want to sell US dollar JPY? Yeah. I think there's going to be a shift in momentum on the JPY crosses. And how long is we're holding this trade for 5 days, right? Is this another week? We're not going to close
that's the next one. This one, it doesn't matter.
It doesn't matter. So if I keep it for 5 days, I'm good to go.
Yeah, absolutely.
All right. So I've got a lot of overbought conditions. Markets are taking out some highs. I do feel that the JPY are due for a bit of strength. We've had long dips in JPY. So I'm going to go ahead and expect JPY to strengthen over the next week. In fact, it may even take place today. So I think I'm going to do the same thing as I did with the other pairs. I'm going to go ahead and do a bit of a short-term trade, see what the news does, because what could happen right here is I could be positive very quickly with the news coming out in 13 minutes?
Yeah.
So I'm going to go ahead and short US dollar JPY and play this. But this time I'm going to put a limit out there. I'm going to add a little bit more into it. I'm going to put a limit on that. And so, and I'm using this, look at the weekly right here. This weekly is showing a nice little, now I understand this weekly is still active, this candle is still active, and so anything can happen. But because of the rallies that we've seen over the last few weeks, I'm thinking US dollar JPY weakness as we come back. And if I go to let's go to a daily right here. I'll notice right here that the market broke out of this downward channel right here, broke it. So there is definitely some correction due on US dollar JPY. So I'm going to jump into charge right here, and let's pop open the US dollar JPY. So USD JPY, and let's go ahead and open up a chart here. All right, so what have I got here? I've got the 1 hour open up here. That's fine. Let's actually change this to a 15 minutes so we can get a little bit closer up to the market. And I'm going to go ahead and start selling. I'm going to go a little bit more aggressive on this. How much margin have I got left here? Because we're going to use all the margin. All right, so we're going to go, let's get crazy here. Go 5.
Is not something you hear traders say every day, by the way, guys. Let's use all the margin. Let me just finish that. Is not something you hear traders say.
So I've gone in short right here, but I'm going to put in additional entry points a little bit above right here. I'm going to go ahead and throw in. So I'm in at what? 122.49. But I'm going to go in and I'm going to add another. Let's see here. There we go. I'm going to add another position right here. Sell there. And I'm going to add another one just above that. And we should be good on this one right here. There it is. I've got, and I'm going to put in, just like I said, I'm going to go ahead and put it in a limit on this. So I'm going to drag this down, and I'm looking for a 20 pip grab on this one right here. Let's go with the 20 pips right about there. Okay. So I put a limit in there. There it is there. And so if the market spikes down, goes 20 pips, we're going to go ahead and capture and get the heck out of Dodge.
Nice. Okay. Philip, you're on deck, my friend.
Buddy.
Am I
looking at dollar yen as well? Am I looking at dollar yen as well?
Yes, please.
Okay, cool. Can you see my screen?
Yes, we can.
Excellent. Well, actually, I was looking to go long dollar yen at 121.50, which is this one here.
Fighting words, guys.
And I was looking at take profit at 124 with stop loss at 120. So that was the initial. If I ignore the fact that we have non-farm payroll coming in any minute now, that's what I would normally do, because from the trend point of view, this is still up. I can see this is some profit taking, but Federal Reserve will keep on hiking rates. Bank of Japan will not do anything, and this is only one-sided trade in my book. There'll be a corrective pullback. Yes, I understand that, but that's what I would normally do. So if I ignore everything else and just look at the technical picture, I would probably be looking to go long around here. But because I have to trade at market, am I trading at market or am I putting an order? Chris, what can I do?
I believe you can put an order in. I don't think you have to trade at market.
Okay. Well, if I put an order, entry order long at 121.50 with stop loss at 120.30, so I'm generous in my stop. Really, really generous in my stop. So let me show you where my stop is. 120. 30 thereabouts. So this would be the amount of risk that I would be willing to take, and then I'm looking for the price to spike higher and hit 124, which is these previous highs, possibly even 124.90, 125. From the risk to reward push point of view, happy with that. 3-1, off we go. So that's where I'm with the dollar yen at the moment. Yet again, highly speculative, as both of you know. We all experienced in seeing market reaction during the non-farm payrolls and the volatility they can bring. So obviously, I wouldn't necessarily do this front running the non-farm payroll, but let's stick with it because that's the will.
I don't think I've traded non-farm in. Gary, when was the last time I traded non-farm with you?
There is,
you know what?
Yeah, there is another. Sorry, guys.
Sorry, Philip. Yeah, non-farms have not been the way that it was back in 2001, 2002.
No.
We used to do a lot of arbitrage on different platforms. So what we do is you take one platform, we'll trade it, and we'll trade and follow a faster price update. So you got a platform that really updates their price and follows the market very closely, but then you get some platforms that were lagging behind. And non-farm payroll used to be the most exciting thing. We used to trade once a month, and that was non-farm payroll.
Yeah.
And what we did is we went ahead and we made sure that we were watching the faster feed, and we're trading all our funds. We trade 80% of our capital on the slower feed. And then as soon as the non-farm payroll came out, we used to have jumps like 200-300 pips at a time, which is huge. And then what we do is when the platform on that's quick moves, we then go ahead and have the buy and sell button ready, and we'll go, okay, buy, and we'll go buy, and we'll pick a US pair, and we'll go buy or sell. And within seconds, we'd be in the money, and we'd go ahead and we keep watching the fast feed. And when the fast feed drops, we'd go ahead and sell and get out of that position. And we used to make so much money just trading once a month with non-farm payroll.
Do you mind if I jump in? Sorry to interrupt, Gary.
Yeah, go ahead, Phil.
Can you see my chart, please? For those of you who are watching this, who are more of speculative nature and you want to be in the trade right now, there is a very simple setup that you can repeat very easily across a range of the markets. As Gary was saying, this is an alternative to possibly trading non-farm payrolls. So this is dollar yen in 15-minute time frame. You can do something that's called volatility breakout. And a long time ago on a prop desk, we used to do this kind of stuff with the S&P E-minis and so on. But this is dollar yen. So we can also place another trade from the intraday point of view. We would identify this trading range. This is a 15-minute time frame. There's a trading range here, and we can have a long order at the breakout of these resistances up here at 122.70 with a stop loss just below this range here at 122.20 with the view to take profit somewhere higher. But this can be done very quickly in a manual way. And then we can also have a short order just below the cluster of these lows at 122.30 with a stop loss at 122.90 with the view to take profit down here at 121.50. So this will be one cancels the other, and this is done. One of these orders will be triggered very quickly. Sometimes you get stopped out twice. I said it's more speculative, but if for somebody who wants to front run major news, this is the way to do it.
Okay.
Yeah, and Philip, I don't know, man. You know that strategy was applied. We applied that back in 2000 and 2001 and 2002 when we really had good breakouts. Non-farm payroll hasn't been that exciting. In fact,
Yeah.
most fundamentals today are really not that great to trade and try and run, because in the time that we were trading back in 2001, 2002, there used to be a broker rule, and that was guaranteed your entries. That means even on your pending orders. So if you use limit orders or stop orders, you would get guaranteed. In fact, they even guaranteed your stop loss. So even if you had a stop loss placed, and that's why we used the 80% of
A
our capital, and we
long
just
time ago.
yeah. But this is the thing, the brokers guaranteed us stops, but then when they changed the rules and they said like, well, we're not going to guarantee stops, but we'll fill you at the next available price, that became a problem, because you can get caught up in a trade that you move your stop up, and then the market gaps a certain amount that doesn't protect you, because they'll fill you at the next available price. That could be 100, 200 pips if the news is that strong. So that strategy of straddling the market and looking for that breakout based on volatility, to me, hasn't worked. Have you done that? Have you applied that recently in the non-farm payroll a lot?
As I said, I am usually flat ahead of non-farm payroll. So
Yeah.
I'm stating that as a
Yeah.
very firm statement. I'm nothing
Sure.
open intraday scalping ahead of non-farm payrolls, but trading the news, maybe some other news, let's say earnings, company earnings, or crude oil inventories, or whatever you trade, central bank interest rate decision, whatever you trade, possibly a strategy like this could work.
Gotcha. Yeah.
Okay.
Gotcha.
Okay.
Yeah.
Cool.
Great.
Yeah, that's interesting. Yeah, and when you apply that straddle move, do you use long-term market direction, or are you just looking for a breakout?
Well, I would normally trade in the direction of the prevailing trend. So shorter term time frame is fading the trend, and that's how I would normally trade. And if I'm scalping from the intraday point of view, my entry is in 15 minutes or 5 minutes, but my trend is 4 hourly, 1 hourly. So that's what I normally do.
Sure.
Front running the news, this is completely irrelevant of the trend, because the news can trigger the sentiment change, and therefore the trend can reverse, or market participants can become influenced by the news, and sentiment changes for a bit. So in this case, one cancels the other order, or if you're quick on a finger and if you have ability to look at the screen, you can
Sure.
change them yourself.
Yeah.
You can basically just get out of that trade very quickly. You're looking for a 5-10 point risk for 15-20 point gain.
Yes.
It's very, very quick. It's not scientific in any way. It's very mechanical, and without any emotion. You're either going to get stopped out, you're going to get rewarded very quickly.
Oh, I'm always emotional. I'm going to break some tables and chairs if that happens to me. No, I'm just kidding. Hey, you know what? If I can just go to my
60
chart here
seconds.
quickly, I know we've got to go jump to the next one here, Chris. But I want to just add what Philip was saying here.
Yeah.
What I normally do is I follow Elliott wave structure very, very often when I look for trade
Hang
setups.
on, Gary.
That's a religion. That's a religion.
Producer-
That's not a strategy, man.
What did you say, Chris?
That's true. That's true. Producers, can we get Gary's charts on the screen, please?
Okay,
Thank
perfect.
you. There we go. Okay, Gary, go ahead.
I was saying Elliott wave is a religion. It's a cult, man. That's not a strategy.
Yes, but you know what? Even cults turn out to be somewhat positive. No, I'm just kidding. It doesn't. It doesn't. All right. So this is the thing here. With Elliott wave, what's important specifically, and adding on to what Philip said, looking for straddle trades and looking for breakout straddle trades, and it can be done on different time frames, depending, of course, what type of news or event you're trading. But what I tend to do is, when you have something really big coming out and you want to try and pick the right trend, because you said you want to trade in the prevailing trend, right? Pick the direction. What I do is I look at Elliott wave structure. Now, Elliott wave structure works like this. It has a 5-wave inside structure, and then it goes ahead and has a 3-wave correction move. And then we have the same process all over again. So we have 5 waves, 3-wave correction, and then we start again, 5 waves, 3-wave correction, and so forth, until it creates a bigger wave. And then we'll start the whole process of off again with a bigger structure. But the thing here is you've got to realize that when Philip talks about consolidation, there's two areas where that consolidation occurs or could occur in a 5-wave structure, and that is in the second wave or the fourth wave. And so what's important is if you're trading, let's use the fourth wave as an example. So if you're trading the fourth wave, and I'm going to pull this down a little bit so I can just get some white screen here. So this is what's going to happen. When the market makes this third wave and then starts coming back on a fourth wave move, what tends to happen is the market always finds the wave one right here as a support level. And the fourth wave and the second wave is normally the consolidated waves. That's when it moves sideways. So you can have the market doing this before we have a fifth wave breakout. And so this is how you can absolutely get in on those trades. Now, this is Philip mentioned the breakout, trading that breakout. Well, if you know where you are with inside the wave structure, then what you could do is you can actually start buying inside the consolidation down here at the bottoms at the support level, because you're expecting price to move back up north. So if you do buy at the bottom right here and price moves up to the top, you can either start scaling out of your positions, take some profits off, and then move your stops up and allow the market to then break out, or wait for the market to break out and place your stops down here below, because you know there's going to be a breakout. And so you can also anticipate where the target's going to be on the fifth wave as well, because you are trading at the bottom of the fourth wave. You now can anticipate where the market's going to go, so you know where to take your profit. Because anytime whether you're scalping, swing trading, looking for breakouts based on this consolidation, the most important thing about trading is know where you are with inside the market, right? Know where the support and resistance levels are, so you can go ahead and enter at support by buying at support or selling at resistance. And by understanding market cycles, you get to understand where the best place is, where's that that hot spot or the sweet spot, as some may call it. The sweet spot as to where you want to get in, but then also knowing where you're getting in, also understand where you're going to get out, because that's important. The biggest trouble that a lot of traders have is they struggle with getting out of the market, taking their profits, and sometimes they hold on to positions so much longer than they should, and ends up turning into a negative trade just because they don't know where to take profits. So that's important right there as well. But yeah, wave structure is an absolute awesome way to be able to identify the turning points of the market and know where you are. So when the markets do what it does, you know exactly how to manage your positions.
Fantastic.
All valid. But I was just looking at the reaction. We got 431,000 jobs created in US, which is a disappointing number. The expectation was 495. But the US unemployment dropped to 3.6 from expected 3.7, and the average earnings printed a better number. So very muted reaction in stocks here. Also, dollar yen is just ranging within that support and resistance. Gold didn't do much. Oil didn't do much. So very muted reaction to the numbers at the moment.
I'm just taking a look at the Dow, the Nasdaq, and the S&P. They're all selling off simultaneously as we speak.
They're all selling off, and they're coming to a level where I would like to sell more. Can I show you my Dow chart
Please.
or S&P
Please,
chart?
yeah.
So I was looking at this little range here, and it's the same thing with this is Dow Jones. This is Nasdaq. They all look very, very similar. They're coming to the point now where potentially we could see another leg lower, and I would expect something like this to happen. A little bit of a sell-off, possibly a rebound at the open, and then either something like this occurring to the way down, which gives us entry. It gives us a kind of a cluster of these lows as a potential take profit. So early days yet, but potentially this could be setting up for a short sell. It needs to break. The candle price action needs to break and close below this little rising support and create something like this for another leg lower. And this is the same across S&P, Nasdaq, Dow Jones. They all look identical. Otherwise, if this doesn't happen at the open, we could see breakout and then retest of these previous previous highs here. Sorry, apologies. As a loss of support. So something like that. So early days, but yeah, it's setting up. Sorry, guys. Carry on.
No, thank you for that. All right, let's see what we've got going on. So just across the board here, looks like dollar CAD is on the rise. How are your trades doing, guys? The positions you've taken already. How are
I'm
they doing?
in the money. I'm in the money with oil. Oil is you're still sharing my screen. So although I did not initiate the trade manually when I was saying I got in at 99.80. It's currently at 115. So I'm about 35 points in the money on this trade. I'm expecting crude oil to carry on moving higher. Whatever they're doing with strategic oil reserves releases will backfire. Oil is going higher. I think oil is going higher. As long as it holds 100, it's a nice and round number. Loads of guys are getting in at the round numbers. Retail traders love round numbers. Anybody who is short is taking profit at that level. Anybody who is possibly feeling bullish like me would be looking to get the feel around that number as well. So that's a hugely important number. As long as it holds, oil could go higher in my book. And also this dollar yen trade, this was we had two options. First one was a pullback to 121.50 for buy with a stop below with a take profit higher. This would be a longer term swing type trade. And the shorter term trade was this volatility breakout, which is still setting up. It wasn't triggered. So if I was if I'm trading non-farm payroll breakout, I would now remove my orders out of this. Because the breakout did not happen when the news came out. So it's no longer valid.
Yeah.
All good?
Yeah.
So if you don't see that move immediately, Philip,
you get out.
That plan goes out the window, basically.
Get out. It's pointless holding it. I would reassess it in a different way afterwards. So if I see a breakout and a candle closing here triggered by something else, then I might re-enter again. I would look for a breakout, retest, and then another leg higher. But that'll be based on something else. It's not triggered by the news.
Right.
Yeah.
Right.
And that's exactly what I've been saying about the non-farm payroll. Not the non-farm payroll like we used to know it.
Yeah, it's very muted. Very muted. Yeah.
Yeah. So if we go ahead and take a look at my trade here, you go to my chart here, and let's go ahead and show. And I'm gonna go ahead and say this. Oil prices. I've got a different perspective about oil prices at the moment right now to what Philip has, and I'll tell you why. If you look at the monthly, you've got this long wick to the upside on the monthly. Correction is due. So we have this long week in the upside. We can see it's extremely overbought on US oil. I get the whole, the adjustments that President Biden's trying to make. I don't have the confidence in him to do what he needs to do, but I do believe that there is a correction due based on technical. Now, fundamentals, it's very difficult to understand really what the fundamentals are going to do. But technicals, I know that like an inside book. I can read it so easily. It's so for me so clear. If I look at the monthly, look at that long wick to the upside. Let's go take a look at the daily. Daily's got a nice little swing here, right down. So there is a further drop needed. Now, I agree that there is a bit of support coming off this trend line going up right here. And I think that we're going to see a breakout of that because the market's look at the daily right here. Sorry, not the daily, the weekly. Take a look at the weekly. The weekly's got this big bearish candle right here. So I think that this is going to be enough to be able to push it. Plus, the weekly is an extreme overbought, looking to get out of the overbought area. So I think there's going to be enough momentum to be able to push it through. Again, we'll have to take and see how that plays out. So I'm definitely going to be bearish on US, at least in the short term. And let's take a look at my positions. So my positions right now, I am up on the US dollar CAD. I'm actually, like I said, I was going to chase after 20 pips. I was really looking for around about 25.10. We came close to that. I held on. I think we got to 25.08. So I'm still holding on to that a little bit longer. But I've got 2 positions over here. I was actually in the money on the US dollar. If I go to the 5 minute on this, you'll see here we're in the money. And I was tempted to close out on this one right here. It is the 5 minute. So we had a little rally here and then it pulled back. So I was deep in the money. But I'm going to hold on to this one a little bit longer because if we do push above this resistance, it's going to come back to retest. I'm going to be able to make an adjustment. So right now, I've got US dollar US dollar CAD in the money. My New Zealand CAD's not moving much because there's not a lot of news coming out for the Canadian dollar itself, except for the oil. And then, of course, the US dollar JPY. We've now locked into 2 positions right now. We'll see how that plays out.
Okay.
Can I just add something very quickly? Because
Sure.
Gary, if you can show that weekly chart again for oil. I
Yes.
agree with you with loads of stuff that you're saying, and whatever President Biden is doing, that's intended to lower the price of crude oil. So that's basically bearish from the supply and demand point of view for crude oil. But we have a geopolitical tension somewhere else. We also have OPEC, which are notorious about lying about what they're going to do and their production cuts or production increases because they want a higher oil price because that's how they make money. Okay, so over a longer period of time, I think oil should go higher. Now, when you look at your weekly chart and you see this big bearish engulfing candle, and I agree with you completely from a technical point of view, but I've been around the block a few times, and I know when retail traders see that type of candle, they wait for it to complete and then they jump short. And guess what happens? Intelligent money, smart money go in and buy.
Yeah.
They buy the dip. And there is a reversal. And retail traders end up holding the risk, and intelligent money, smart money, gives them the risk, hands over the risk to them, and there's a short-term reversal. So basically, they get stopped out, and the other guys get in short again at the higher level. It's a fairly repetitive process that happens over and over and over again. So even if the price does go lower, I wouldn't be surprised to see an oversold bounce back. And for me, that's good enough.
Yeah, absolutely. All patterns, and even trendy moves. I mean, you take a look at all patterns. Anytime a pattern is broken, there's a retest of that pattern. Anytime consolidation is broken, there's a retest of the consolidation. And the same for swings. If you look at just elite wave swings, the market creates a wave 1, then we have what? We have a correction move. Correction is actually built into the DNA of all types of breakout swing trends. It's all built into that. So you're right, absolutely right. There's going to be a candle formation form, and that candle formation will be retested, because if you take that candle formation on the weekly and you break that down onto a 15 or 1 hour time frame, you'll actually see a trend of a wave structure that'll show you that in fact, let's show them on the chart here is exactly what I'm saying. So there's that bearish candlestick formation right here. If I go down to the 15 right here, you will see wave structure with inside that structure right here. Look at this. Wave 1, 2, 3, 4, and now we're heading to the 5th one. So we're in the 4th wave structure right here.
Sorry to jump,
for a 5th wave breakout.
I'm really sorry to jump in. Can I go short Nasdaq now? 14,900, 14900, or whatever the market price is. I'm shorting Nasdaq now. Stop is at 14,950, 14950. I'm shorting Nasdaq at market right now with the take profit at 14,700, 14700. I'm sorry to jump in, but this is happening right now.
Okay, that's fine. So yeah, so that's my position right now. So that's my position on the market's movement. I believe oil is going to get down to around about between 90 and let's say 90 and 85. That to me is the sweet spot on a U-turn, and I think the only way that oil is going to get lower is if we start producing oil here in the US. I think with all these negotiations with different countries and that Biden's trying to pull, I think that's not going to really create any sort of confidence or lower pricing in oil. We might have some short-term dips, but I think nothing below 85 in the short term. So,
well, considering gas prices over here in the UK at the moment are like $97 a gallon, Gary, I'm really hoping that you're right.
Good luck.
Thank you.
Good luck. Yeah.
All right, guys, let's move on to challenge number 3, shall we?
Absolutely.
All right. What is your best, repeat, your best short-term trade for the next 5 days? Gary, you're up first this time.
Okay, I think I was actually up first the last time, but
Then Philip's up first this time.
Well, you go for it. Go for it. I'll give you the opportunity.
All right, go for it, Philip.
You're muted,
I
Philip.
think
You're
we've
muted.
lost audio, Philip.
Apologies. Can you hear me now?
There you go.
Sorry.
Yes.
The reason I'll just go back to that Nasdaq trade first, and from the structure point of view, yet again, you guys are very familiar with this: higher lows. There's rounding top here, low first. Sorry, high first, lower high, second lower high, low, lower low, lower low. So all of this looks like possibly it could have a little bit more to the downside, and this ranging process here was the one that triggered. So the candle that I was telling you about that triggered my entry was actually this candle here. Okay, so now this could be a possible retest, support, loss of support, retest for another leg lower. If I'm wrong, I'll pay 50 points to prove myself right. If I'm right, I'll get 200 points out of this trade. So 4-to-1 risk to reward ratio. That was the logic behind it. And apologies, guys, for jumping in while you were speaking, but the time frame was completed and I had to get in. Otherwise, I would have missed the entry. So from the other kind of swing type position, I would be looking to go long gold. And yet again, there's actually a couple of other different positions, euro as well, but let's go with the gold. Looking to go for long gold around these levels down here, 1925, 1927. So around here where this support line is, with the stop at 1910. If I'm generous, it could be 1900 to the low, with the view to take profit at 1975, which is up here. So this could be a fairly decent risk to reward ratio for me. So I'm looking for this to be a potential take profit zone. And yet again, this is very much short-term session. For those of you who came across TraderCast daily live trading on our YouTube channel. So just type in Phillip Konchar TraderCast YouTube. You'll see me do this every day. I haven't been doing it for the last 20 days because I was away, but I'll start doing it from next week again. You can see my trades. You can see the way I would manage my positions as well. And it's completely free. If you're looking for the education, you can check my trading skills, free courses as well. Now, the way I would manage it, if this plays out, I would quickly move my stop loss at break even or above break even and try and lock in some unrealized profits. But I would also be taking partial profits as I go along. So partial profits at 1950, 1965, 1975 on the upside. So basically take profit up here. But from the swing point of view, fairly static, get in, stop, take profit. This is the longer term position for me. And I think we could see a spike higher in gold again.
All right. Fantastic. So bullish on gold, and on NASDAQ, of course, you sold it. Yep.
Short.
Perfect.
And yes, and long crude oil.
And long crude oil. Yep.
From 99.80. Yeah.
Okay. Perfect. Thanks, Philip. Gary, your best trade for the next 5 days, mate.
All right, it's a battle, so I'm going to go against. Now, I'm just kidding. All right, so what I'm going to go ahead and do is just give you a quick update on the US dollar CAD, and then I'll jump into that one right here. If you take a look at my chart, you see that we had a rally. The market's not dipping. I've already taken my profit on that trade, so I've already closed out, taking my profit on the US dollar CAD. But now the correction's due here, and so what I'm going to do is when the market drops back down to this level right here, I want to go ahead and buy back in again. So I'm going to add back into the US dollar CAD position. Just keep adding to that. So I've already closed out some profit on that as well. And so let me just do this and update everyone on this. So this is the pullback we're having. And what I'm going to do is I'm going to actually go ahead and look to enter just a little bit above there. I want to go ahead and look for that retest. So it's about 25. Okay, so I'm looking at about 20. Looks like 24.94 around about there. I'm going to go a little bit higher than that and jump in at 24.95, right about there. Okay, I'm going to go ahead and buy in at that point there. Boom, done. So I've got a limit buy at that point. So if the market corrects itself, dips, and then rallies, we're good to go on that. My US dollar CAD position is working out. Sorry, my CAD, New Zealand CAD is in the money at the moment right now. I'm still working out the other trade on the JPYs. So let's go ahead and take a look at the next trade. So the trade for the next 5 days, I really want to go into US dollar or this Euro Swiss. I think Euro Swiss is due for a big move. If I go again to the weekly, we had this correction move right here. We had a dip. It's trying to push up. We do see a bit of oversold conditions right here. Not quite seeing any sort of positive divergence on the weekly. But if I go to the monthly, I like the monthly setup right here. Take a look at the monthly right here. I've already been talking to my traders about buying here at the bottom right here. So I like this buy, oversold condition, big wick to the downside right here. Definitely looking for price to come back up to at least 612. So let's go ahead and do a buy. I'm going to do one big solid buy on that. I want to go to the daily here as well. Okay, the daily. Yeah, I'm going to do a buy a little bit lower there. So I'm going to do multiple entry points, another buy a little lower there as well. So let's buy at market. And I'm going to go here, open up the Swiss. So Euro Swiss right here. I think what I'm going to do is I'm going to add some more information on why. Let's get here as well. Let's just first get into this trade. So I'm going to get in on right now, just so we get in on a trade. So I'm buying Swiss. I'll add my other positions at the moment right now, but let me first take a look and show you a little bit more about this as well. If I go to the monthly, we've got a lot of support coming off this area right here. So we had 1, 2, and now we're at the third test right here. Let me eliminate all those so we can see what's going on my chart here. There we go. So we've got a lot of support coming off this area right here. So this for me is a good solid buy on US dollar Swiss. Even if we're just coming up here to retest the tops right here, that's at 1.2 thousand right there. And here is around about 1.1 thousand. So we got those very psychological levels here that the market can retest. Look at that candle, man. That just certainly tells us something. And I'm looking for at least a rally up there. So I'm going to go ahead and get in on that trade again on a second entry. And my second entry point is going to be based on a break of this low right here. So I'm going to go ahead and put a mark on that. And I can see that the price is around about, looks like 1.0190. So let me go ahead and enter that second trade. And I'll explain to you why I'm going to do that. But let's go ahead and put a new order in here. And this is going to be a buy limit order. And we said that the price I'm getting in at is, let's just make sure about that price again. 190. So it's 1.0190. So 1.0 190 right here is the buy. And I'm going to say this is a holy trade. I'll just give it a nice little comment right there. All right, so there it is there. So we're in on two positions. There it is there. One there, currently right now in the market right now. The reason why I get in at the market right now is because I'm anticipating price to move now. And if it does correct itself to those lows, to retest those lows again, we'll get in on a second trade before the market goes ahead and takes off. And that's pretty much all. I'm not going to go ahead and enter in any other trades. I think those are the trades I'm going to hold over there.
Okay, fantastic. Well, thank you so much, gentlemen. So that's all three challenges done. Before we wrap up for the day, I can't believe we're almost at the end of the battle already. Before we wrap things up, though, let's talk a little bit about your charities. So, Philip, if you could just share with us, what charity have you chosen, my friend, and just a little bit as to why you've chosen it. And you're muted again.
It's charity based in Ireland, and it's a charity which is relevant for kids' health. So hopefully, I know on a couple of other occasions, some money went to them. So I was really happy with that. So hopefully they're going to get some this time around as well.
Excellent. And Gary, your charity?
Yeah, sure. So I've got Kitty Up. Kitty Up is a charity that I chose. It is a ranch that is used for special needs kids, and they've got horses there, they've got animals there, and they bring this to especially kids, and they really do a great job to be able to, help them to develop skills in that. And so they're a local company. It's actually a very good friend of mine, well, a family friend of ours. They started this about 10 years ago and doing an absolutely great job, and just it's just wonders what animals can do for these kids. So that's the charity for me.
Fantastic. Really good. Right, gentlemen, thank you so much. It's been a wonderful, wonderful battle. That concludes battle
Chris?
number 45. Oh,
Chris, before you end, is
yeah.
it possible that we can just share with everyone exactly how they can get in touch with us?
No.
Okay, then let's move on.
No, of course. And actually, by the way, before you do that, Gary, thank you for reminding me. Because for those of you watching along, if you like what you see, don't forget to hit that like button. Don't forget to subscribe to the Trading Battle. Follow us on Instagram, Twitter, all the other socials. And in terms of how to access these two fine gentlemen after the battle, Gary, take it away. How can people reach you?
Absolutely. Well, I run a YouTube channel called FX Big Dog, as well as the Traders Network Club. If you look at those two channels, there, Traders Network Club and FX Big Dog channel. And so what we do is we do regular sessions in the week, and what we do is we chase after these 20 pip targets, just like you saw what I did today. Is what we do on on Tuesday, Wednesday, and Thursday through my channel. And we've been doing absolutely awesome. In fact, last year we closed out with 153% profits. This year, we're up over 60% just doing this. So definitely go ahead and check out my channel, FX Big Dog, FX Big Dog channel, as well as the Traders Network Club. Will go straight to the website. And then, of course, I'm on Twitter, Facebook, Instagram, all that good stuff, Snapchat, Whack, whatever. You just think whatever those channels are. I'm on those channels. But best thing to use, follow me on the FX Big Dog channel, and check out the live sessions we do on the Tuesday, Wednesday, and Thursday. Where we do some live trading, just like we've done here, live trading, implement the trades. We actually have a Telegram channel that's inside the YouTube description, where they can actually follow the trades that we put in. So not only are we talking about it, but we're showing you the trades we put in. They can follow the trades, they can do whatever they want, but the Telegram channel will give them all that information for them.
Fantastic. What was that profit you said you were up last year?
Last year, 153% last year, and this year we're up over 60%. In fact, if you go ahead and take a look at my screen right here.
No, I'm asking because drinks are on you next time I see you in Florida. Then,
hey? All right. Well, here it is right here. You can see if you look at my screen right here. This is what we've done. That's what we did last year in 2021, 153%, and this is what we're doing so far. We're up. If you go take a look over here. 61% this year so far. So we're up 303%, 307% since we started early 21. Yeah.
Fantastic.
Okay.
Thanks, Gary. And Philip, how can people get in touch with you, my friend?
Most of the people know me from TraderCast, which is the community. If you don't mind sharing the screen again, they'll be great. So this is the YouTube channel. There is plenty of TraderCasts around. So this is the one that I'm on. Feel free, subscribe. I do some live trading every day. See my trades. You can talk to me. You can ask questions. And it's usually 30 minutes before the US Open. So TraderCast, type in Phillip Konchar and so on. TraderCast is a community, but if you're looking for the education, this is probably a good resource for you as well. So it's called My Trading Skills. You also find about that YouTube channel by clicking here. And courses, we have loads of courses which are free. So you just need to sign up, and you can check on those. They're quite sophisticated. They're all video courses on demand with the little tests at the end. Check them. Most of this stuff that we were talking about earlier, breakout, support and resistance, all of these concepts. If you're new and this all seems to be overwhelming you with the terminology or what we meant, really, it's all covered here and it's completely free. So test it first. Check out our Trustpilot rating, see what other people are saying about us, and don't pay for anything until you try the free stuff first. And if you like how I teach and what we're saying and those, then and you need to know more, then let me know. I'll be happy to talk to you. So that's where I am. So YouTube, free live trading, or TraderCast, or My Trading Skills for the education.
Fantastic.
That's a plug-in.
Excellent. Great plugs, guys. Thank you. Well, thank you so much, Gary, Philip. It's been an absolute pleasure. And thank you to our audience for joining us. This concludes Trading Battle number 45. Until next time, see you guys.